Hey there, everyone, and welcome to the Final Bar. It's Thursday, May 16th. I'm your host, Dave Keller. I'm the Chief Market Strategist here at StockCharts.com in a cloudy Redmond, Washington. We have a decent guest today. Legendary trader and author Larry Williams is going to join us live here in the StockCharts TV studio. Should be a lot of fun. We'll see what sort of topics we can get into. Hard not to be fairly constructive on the markets with the S&P, the NASDAQ around new all-time highs, the Dow barely trading above 40k for the first time in history. A lot of charts to cover here. Let's get right to our market recap and see how things played out. Weaker close, but before we get to the short-term charts, let's talk about a poll we had recently on our social media platforms. Next 10% move in the S&P, do you think that's a higher 10% move or a lower 10% move? 2/3 of you say 10% higher is going to come first. That's a really interesting one. Let's go to a daily chart of the S&P 500 and see what that would actually represent. So 10% up, that would take us, let's say we're at 5,300, takes us around 58 or so, 5,800. Boy, that's quite a ways above current levels. But again, the way that we are trading, that becomes more and more of a possibility, I guess, right? On the downside, if we would take 10% off of the current values, we can actually do that pretty easily with our inspect tool. This is where we're at. We go 10% down. That would take us here around 47.70. That would take us actually right down to the 200-day moving average. So most of us saying higher rather than lower. It's hard to disagree with that general assessment given the strength that we've seen off of the April lows, given the fact that our major benchmarks are all above their previous highs. The question I would have for this market, which I'll pose to Larry Williams, and we will try to address here in the market recap, is the sustainability of this up move. As a trend follower, which I would certainly consider myself, higher highs, higher lows are bullish. So that next pullback, do we make a higher low? I think as long as we do, this trend's in pretty good shape. Thanks for answering that poll question, by the way. Don't forget to follow us on all your socials so you don't miss the next poll question. Looking at the major averages today, you can see the S&P, the NASDAQ, while they traded higher out of the open, finished off a little bit weaker, but not by much. The S&P closing just below 5,300, 0.2% to the downside. The NASDAQ composite finishes just below 16,700. That's about 0.25% lower. The Dow did briefly close or trade above 40,000, that is, around 11, 12 o'clock Eastern. But by the close, we were back more to the lows of the day. So for now, the market's repelling that Dow 40k level. To be honest with you, the Dow reaching 40,000 I don't think has any particular mystique or meaning. That group of 30 stocks has changed quite a bit. I think focusing on a particular numbers probably are less meaningful than you might assume that it is. But the fact that we're even talking about a major threshold that it has reached, I think, is the story, right? The fact that the trends are so strong that the Dow is able to reach that new milestone. The fact that the S&P is breaking above 5,000, above 5,250, those are the types of things that I think do have a meaning. So while we had a weaker close overall, pretty decent momentum going into the afternoon. Mid caps, small caps all in the red. The volatility reading using the VIX actually finished just slightly lower. And honestly, it was kind of a volatile session for the VIX. Volatile for volatility, I guess, is the way you think about it. Still around 12.4. It's about where it was at yesterday's close. Now, the VIX came down quite a bit through the course of yesterday's session. Today was sort of just a staying low kind of thing. So remember, when the VIX is below 15, my general thought is this is a low volatility, almost no volatility. I mean, there's that natural amount of movement that you have, which is why the VIX is not at zero. But it's not super crazy. It's not super uncertain. It's more of a low volatility, slow and steady grind higher, and that is certainly what this market feels like. Interest rates overall started a little bit lower. By the end of the day, actually had moved higher. The bond markets closed around 3 p.m. Eastern, which is why the chart stops around there. 10-year yield finishing at the highs of the day around 4.38. The 5-year point a little bit higher, right around 4.4%. The long bond yield higher still around 4.52, we'll call it. The short end of the curve, again, which is more where the Fed is adjusting their target rate, still fairly elevated. So would be interesting. One of my conversations recently was with Ms. Schneider. We were talking about the yield curve maybe more normalizing and long yields pushing to the upside. We're seeing a little bit of that this week, but again, overall yields have come off quite a bit here. Looking at the commodity space, we've covered gold's incredible run moving toward new all-time highs. We're currently around 220 for the GLD, and that's down about 0.4% from yesterday's close. The rest of precious metals came down as well. Industrial metals like copper came down also. Crude oil prices actually finished a little bit higher, about 0.5% up for the USO. Cryptocurrencies overall rolling over a little bit. You can see Bitcoin in the last 24 hours did get briefly above 66,000 before rotating down. Currently just above 65,000. We'll call it 65,260. It's about 1.5% below those highs that we experienced at the end of the sort of official or unofficial trading day for Bitcoin. Ether price is about 3% lower, currently around 29.50. So we did briefly push above 3,000, but coming back down. So it's interesting that both Bitcoin, Ethereum, the Dow, the S&P sort of briefly moving to new highs, but then closing more in a position of weakness. And cryptocurrencies, as we speak, still rotating a bit to the downside. Looking at the sector summary, boy, if you're looking for an all-clear market new highs with reasonable leadership, today's not that day. Consumer staples far outpacing the rest of the market. The XLP is your top performing sector, actually finished up 1.4%. Financials were flat for the day, and communication services slightly lower. So a full 9 out of 11 were down. 10 out of 11 were not up because financials were almost exactly, they actually were exactly flat, no change, which does not happen too often in 2024. Your worst performing sectors, materials, consumer discretionary, industrials, the worst of those materials still down only 0.7%. So this was not a big down day when all was said and done, but certainly not a big dramatic, victorious break above Dow 40k. If that's what you're looking for around 11 a.m., we really didn't get that sort of confirmation by the end of the day. It's so interesting. One of the things I love about the dashboard that we're looking at here is you get a quick review of the market conditions. We can look at the sectors and see some of the themes. And then in the middle, the next line down, I have these market movers. And as a reminder, you can change what you show on your dashboard by clicking in the upper right corner of the little widget there. But if you look at the market movers little widget, I'm looking at the S&P 500, and it's just such an interesting phenomenon that on a day when the market averages are sort of choppy, sloppy, a little bit down, stocks like Walmart are up 7.1%, Dollar General up 4%, 3M, Boeing, both up over 3.5%. You can also look at the stocks down on the day, and it's just a reminder that regardless of what the broader indexes are doing, there is always a lot of movement underneath the hood. So make sure you use those different widgets to really track the movement in areas of the market you may be interested in. The mega cap leadership names to review, sort of mixed. Alphabet and Tesla had a decent up day. Alphabet was up 1%. On the downside, you have Meta, Amazon, Microsoft, Netflix, and others all moving lower. So Meta, again, not too far from all-time highs, but we're sort of seeing a bit of a pullback after that move higher. And what's interesting with a chart like Meta, it's still below its 50-day moving average, right? So, in general, when you see something fail below its 50-day, you want to see it regain it. I think that's what was so encouraging about the S&P and the NASDAQ getting back above their 50-day moving average. Most S&P names are back above their 50-day moving average, but Meta is notably not one of those. It's actually down 1.7%, very much underperforming the broader market. Look at the momentum picture on Meta from the peak in February when we gapped higher. The RSI got above 80 to around 85. But every new high that we've seen, and even this current move that we're in, the RSI is actually slightly below 50 as we're testing the 50-day moving average. So the momentum in some of these leading names has certainly started to dry up a little bit. Amazon is another one actually showing bearish divergence as it's trying to push above 190. It's actually showing it on lower momentum. So the strength that I'm seeing in these markets, again, these are not horrible charts. They're still not too far off of all-time highs. The weekly charts are still quite constructive, so I think the long-term picture is fine. But in the short term, you definitely get the sense that it's not these types of names that are really propelling the markets higher. They're actually drawing down a little bit. They're failing to get to new highs on stronger momentum. It's other areas of the market that are actually starting to improve in a much more impressive way. I do want to look briefly at breadth conditions. I wanted to show you this chart here, which are the cumulative advanced decline lines. I think it was on Monday's show we featured this chart. We did a segment called Banking on Breadth where we dug into some of the key breadth conditions and talked about what they meant. The New York Stock Exchange cumulative advanced decline line did make a new all-time high about a week ago and has continued to push higher. The large cap, mid cap, and small cap AD lines have all made a new high here for 2024 just in the last 24, 48 hours. So the breadth conditions are very strong. This is an interesting market where we're appearing to go higher, not dominated as much by the mega cap growth names, but it's all the other stuff that's starting to work. It's things like financials and industrials, like building materials stocks. It's within communication services, potentially within materials with gold stocks making new 52-week highs. It's not just the growthy stuff that's getting it done right now. It's a very interesting change of character from previous moments within this rally off of the October low. Another chart that I can't help but keep noticing, and again, while new highs are bullish, generally speaking, a chart like this gives me a lot of pause. This is the relative performance of consumer discretionary versus consumer staples. Things you want versus things you need. When conditions are good, when people are optimistic, they have money to spend, they're willing to pay money for discretionary purchases like a new watch, a new trip, a new car, whatever it might be, and pay extra for cool stuff. When conditions are anything, people still need toilet paper and alcohol and tobacco and cleaning products and household goods and things that you kind of need regardless of what's happening in the broader market. So when things you need are outperforming things you want, which is what's been happening since mid-December of last year on the cap-weighted version, when things you want are underperforming things you need from the March top and the equal-weighted version of those ratios, this tells you that investors are more on the defensive side than the offensive side, using these two sectors as a proxy for those general risk assessments. So not all as well as the market is making new all-time highs. Had a lot of fun actually earlier today recording our top 10 stocks to watch, our top 10 charts to watch for May 2024 with my friend Grayson Rose here at StockCharts. We'll share that video with you tomorrow. But Applied Materials, AMAT, was one of those 10. Don't forget to watch the show tomorrow to get the other 9. We had a really good discussion about some of the themes that we're observing and some of the opportunities that we're finding and sort of a technical analysis tutorial as we go along and have that discussion. But stocks like AMAT, pretty encouraging as they make new highs. Now, pulled back a little bit today, but overall, I think the structure is pretty positive. What concerns me about a day like today, you actually have a bearish engulfing pattern it's actually not quite. It's actually technically a dark cloud cover. Let's go to the tape on this one. Yeah, this is actually called a dark cloud cover, where you have a big move higher, you have a big up day, a higher open. We close lower, we get at least 50% of the way, but we don't get below yesterday's open. That's called a dark cloud cover pattern. If you're studying for your CMT exams, don't forget that one. So, Applied Materials, I think the medium-term, long-term structure pretty constructive, breaking above these swing highs, pretty encouraging, but finishing in a position of weakness. It'll be interesting to see how Friday into Monday plays out. Just to finish off, I would highlight some of the bearish divergences. I showed the chart of Amazon earlier, making higher highs on weaker momentum. John Deere showing a similar pattern, making a new swing high just above 415 over the last week, but on weaker momentum. We're overbought at the March and April peaks. We are not overbought here in early May. So, while the trend going up is good, while higher highs and higher lows, generally speaking, are bullish, I'm seeing signs for concern with the leadership trends, with defense outperforming offense, with charts like John Deere and Amazon making new highs, but on weaker momentum. A lot of things to keep in mind. I don't think we're in the all clear just yet. Don't forget to keep watching stock charts. Use our scans and our alerts to make sure that you are on top of all of those market conditions as they evolve. We're going to go to our interview with Larry Williams here in a few moments. Just one quick reminder before we do, and that is to send us your questions. We have a lot of fun doing those mailbag shows where we answer questions from all of you, viewers, and things that you run into trying to analyze charts, use different technical indicators, try to make sense of the macroeconomic environment, and more. Let us know what you're running into so we can answer your questions on our show. thefinalbar@stockcharts.com is our email. On X, just tag us in a comment @FinalBarSCTV. Here on YouTube, just drop a comment below the video that you're watching. We'll hope to hear from you and answer one of your questions in our next mailbag show. It's a pleasure to sit down today with legendary trader and author Larry Williams. Larry, welcome back to the StockCharts TV studio. How are you these days? Still smiling?
Thanks, David. I'm still trading away.
Good.
Trying to figure this business out.
If you haven't done it by now, I'm concerned for the rest of us. But you've obviously had an incredible run as a trader, and you, from the beginning, I think made it very clear you're actually trading. You mentioned before some of the things that you're doing recently. Taking a step back now, May of 2024, S&P, NASDAQ, new all-time highs. Dow, peaked above 40k for the first time. Where's your head at in terms of the overall market conditions here for equities?
Well, it kind of looks like we're in a bull market.
Right? It feels something like this.
I've said from the first of the year that we are in a bull market. We'll stay in a bull market. So you want strategy in a bull market, you buy big dips. You sell big rallies. So we've had a big rally in here. I think there's more room to this market to move to the upside.
Yeah.
Later on, and there'll be some more buy points. I think probably in July there'll be a buy point. In September, another buy point. Bear market? Absolutely not. I mean, people don't like Donald Trump. They don't like Joe Biden. They don't like the federal. It doesn't matter. We are in a bull market. We'll continue until sometime in 2025. Then I think we could have real trouble ahead. But right here, right now, we're going higher.
It's going higher.
Yeah.
2025, of course, will be the beginning of the next administration. So a lot of question marks between now and then, I feel like, for sure. What is it that gives you the confidence that the market is in a position of strength? Is it just the simplicity of the fact that it's going higher? Or what in your toolkit sort of gives you confidence to say this is a risk-on kind of vibe?
Well, the confidence really began last year, before we knew what was going to happen this year. And that was because there's some really strong dominant cycles to the marketplace that have really held up real well, whether it's a 15-year cycle or a 4-year cycle. They're all really bullish right now. But on top of that, the fundamentals of the marketplace, inflation is not that bearish for stocks. It actually, the PPI, which just turned strong this last week, is a very good buy signal. Money supply, interest rates, just weren't in a position where we usually see bear markets. So for that reason, fundamentally, on top of the cyclical aspect of the market, which is quite bullish, still bullish, to me, it's like a no-brainer. Yeah, we're in a bull market. We're in a stable market.
I feel like now, and a lot of discussion earlier today is the Dow pushed above 40K. Didn't close above there, but it did get above.
Whoa, whoopies. That meeting was like one day. Oh, one day. Right. Come on, guys.
So a lot of, when the market's making new all-time highs, I hear you. I think a lot of people are nervous about buying markets at new highs because they feel like we already missed it, right? So stocks like in Amazon or others that have already had their run, you feel like you're too late. What would you say to people that are uncomfortable buying a breakout like this because they feel like, didn't I miss already the beginning of the move? In your experience, what makes new highs an interesting, compelling option?
Strong stocks get stronger. And that's been proven, as you know, by hundreds of studies that you want to buy new highs. You don't want to buy new lows. We've had new highs and people are afraid, well, I didn't buy down here. People have this innate ability and want to buy cheap. We go to Costco because we can get it cheaper, right? But in stocks, if you're buying cheap, it could get a lot cheaper. I lost a lot of money trying to pick bottoms in the market. Ride the trend. Jesse Livermore said it best. He was the best trader and the worst trader because he lost all his fortune, but he bought strength. Because if you're going to bet in a fight, you bet on the biggest and strongest guy. You don't bet on a weak guy. Same thing in the market. Strong stocks tend to stay strong, and that's been proven by a lot of university studies, by private studies. Strength prevails.
So extending that way of thinking, obviously some of the mega cap names, the Magnificent Seven, for lack of a better term, have done incredibly well. A lot of other stocks obviously doing well also, but do you stick with names like that, like the Microsoft, Alphabet types of stocks, or do you see signs to be concerned about in some of those leadership names? They appear to be doing just fine these days, right?
For the most part. So within that group, you'd want to find the ones that have been the strongest. But then there's so much focus on the hot stocks because everybody knows about them. But there's other stocks that I think, like Johnson & Johnson right now, I think is at a buy point. I like that stock. There are other stocks that go, my focus isn't just on the hot stocks, because hot stocks, they can fall apart real quickly because they get too much emotional exuberance. So I like Buffett stocks. I like stocks that have a real business, they're making money now, right here, right now. So I like that. There's an example of stock I think's got a good potential here.
It's fascinating to me. Out of all the names you could throw out, Johnny John's the first one you're mentioning, but it makes a good point, right? It's bouncing off of support, and there, while we've had leadership names that have done quite well and in a lot of ways feel overextended. Things like Johnson & Johnson and others are bouncing off of support, but starting to improve off of those lows.
And it's at a cyclical low. My cycle work says, we're at a low. Boeing, another one, right here in Seattle.
Oh, yeah.
Is Boeing going to die? Come on. It's too big to fail. Are they going to stop making airplanes? I don't think so.
I hope not for the local economy here, right? Yeah.
No. So, and it is also cyclical. Has it been beat up? Yeah.
Yeah.
Is it fundamentally strong? They've had problems. Has Boeing had problems before? Oh, all the time they've had problems. Have they come through it? Yeah, they have. So I think that's another stock that I see a trend change, a buy-in, breakout of trend lines, whatever. I think that's an opportunity stock.
It's interesting when you take a step back at these markets. Again, obviously they've been pretty strong, and I don't want to get into political discussion, but you think about some of the geopolitical challenges, military action in the Middle East. Were you surprised at all? Because it certainly felt with action in Russia, Ukraine, with the Middle East. If you told me all of those things are going to happen, I would think probably a volatile, risky scenario, but the markets are incredibly resilient. Did that surprise you how resilient the markets have been? Or do you feel like markets are going up despite what's happening and that's not much of a surprise to you?
No surprise, because I think the markets are on a path of destiny. And the news, is, as you just pointed out, it's immaterial.
Yeah.
You have I've seen good news and markets crash. I've seen bad news and markets rally. The news, if people get frothy about all the news of the day, I haven't watched television, I haven't owned a television set for 4 or 5 years. I have no idea what's going on in the world. But I know what the cycles of these markets are, of individual stocks, and that's the path of destiny these markets are upon. So sure, the news will fluctuate and cause price extremes on a short-term basis, but on a longer-term basis, which is I'm the type of investor trader I am, there's no money in day trading. I've never seen serious money made because there's no time to make money. You have no trend. You got 5 hours to catch a trend. I have all year long to catch a big trend. So that's where the money is. So the news to me is like, yes, it's interesting, but does it affect what I do? Not really.
How do you, when the markets are making new highs, when stocks or ETFs or futures that you own are going up, how do you think of risk management? I feel like when the markets are going down, risk management is very easy. It's like protect from the downside because we're kind of going there. But when the markets appear strong, how do you think about risk management? How do you protect from a downside reversal? Do you have general ways of approaching that in your own work?
Well, I think it really begins with money management. So I don't want to bet the farm on every trade. I bet, if you will, a certain percentage of the account on each position in the marketplace. So if I lose, I'm going to lose a small amount of money, or a small percentage of the portfolio, and hopefully I'll catch a big move. So that balances it out. So first is position sizing. Because if you have a real big position on, it goes against you a little bit, you're wiped out. So position sizing. And then, do I have stop losses? Absolutely, in the marketplace, somewhere under the recent lows. If I'm going to be wrong, David, I want to feel it. I want to really know I'm wrong. I don't want some little in-a-day fluctuation stops me out of a position, because I wasn't really wrong. So my stops tend to be, and I've always been criticized for that, probably good criticism. I've done a lot of things wrong in my 62 years of doing this. But that's one thing. My stops tend to be away from the market because it's like fishing. You need to give it room to run. You know, the markets have a lot of wild interaction stuff. I can't predict it. I don't know anybody that can. So give it some breathing room and let it run. That's my philosophy, because I'm not good enough to call every little swing in the marketplace for sure.
Now, stocks obviously have had a pretty incredible run so far in 2024, but it's not the only asset class doing quite well. I'd love to talk about a couple others with you if we could. We talked about the bond markets a little bit before we went on with the show. What do you see in the bond space? Is this an area you see further upside, downside, and why?
I think it's still higher based on cycles. Have nothing to do with any of the fundamentals that I may or may not understand. But my cyclical work on bonds indicated, as we said in the Focus on Stock letter that we do for subscribers and viewers here, at the first of the year, the bonds were coming into a low point somewhere in May, and there's going to be a big rally. Well, there's been a big rally. The only question in my mind, because I'm heavily along the bond market, will it still rally? Like, I hope it will. But, you know, hope, you got to have more than hope. But I think based on my cyclical studies, there's still more room to the upside in this market. I'd like to see a pullback to accumulate a larger position. But at this point, I think that this is a market that still has room to move on the upside.
It's interesting, Bond. We're looking at the TLT here. They've rallied really well in the month of May so far, and the TLT breaking above a trend line that you can draw, breaking back above moving averages. Do you think about the relationship between stocks and bonds? Do you think of them in your own trading as look at them independently, think about the cycles, think about the rotations? How do you kind of relate them?
Well, I look at the relationship, the spread difference between stocks and bonds.
Okay.
It's an incredibly powerful tool.
Yeah.
It just recently gave a buy signal in the stock market using high-grade bonds to stocks. Now, this trend line that we've broken out of bonds suggests to me we can run back to that high that we saw at the first of the year.
Yeah.
That's probably the target. It looks like markets like to run to old highs and come down to new lows. So that's a big target. It's way up there. But I think that's probably where we're going to go.
Can we talk about commodities a little bit? Is that okay?
Sure.
Think about crude oil, right? We mentioned earlier with the conflict. Crude oil really hasn't done what people I think were afraid it would do. Prices kind of spike higher. Crude oil is sort of languishing below $80 a barrel. When you're looking at crude, when you're looking at energy-related assets, what's your general sense here?
I could be wrong on this. Wouldn't be the first time I've been wrong. I think crude's going to rally a little bit from here and then probably continue lower until maybe another 2 or 3 months. There is a relationship with gold and crude oil that suggests Tom McClellan done some studies on that maybe crude oil is a buy. I don't think it's quite yet. My cycles say not yet. We're probably going to move to the downside. So actually, probably in a week or so, I'm going to be looking to take sell signals in crude oil. I think this little rally we're in, give us some breathing space in here, but I'm now looking for sells in crude oil.
Very interesting. Gold is another one. I think a lot of people are surprised when you show them the reality that gold has actually outperformed stocks year to date. It's actually up. Physical gold is up more than the S&P and the NASDAQ. Gold just recently making a higher low, sort of threatening new all-time highs again. Is there more upside in gold?
Can you believe that? Sean Hannity, Mark Levin, all those guys have been right on gold. Finally, all the talk show radio guys are right. But they're about to be wrong. I think there's a little more room left in this up move in the gold market. But then my cycle work suggests it's going to start to go down. How big, I don't know. But you look at the charts and say, it could come down, substantially in here. So I was really frustrating. Trying to long goal. I got stopped out just a little bit before the last up move. I thought, I know. When am I going to learn? Come on, Williams. But I do think it can go a little higher, Dave. And then I think we're close to the top in that market. So you can turn off Sean Hannity. Don't buy gold for a while.
You mentioned what I'm sure is a rare miss for you, right? You sort of get stopped out before things rally. Over your career, I'm sure you've been stopped out many times. I'm sure you've been wrong occasionally at times. How do you as a trader move on from those misses? Because I know a lot of people sort of, they get stopped out. They feel like everything's broken. It's tough for them to sort of re-engage. How do you sort of have the confidence to get back in the next time?
You have to have the confidence to go from one losing trade to another one, maintaining your equity balance. So that's, again, not betting too much. Money management really is emotional management. So if I don't bet too much, I still have my emotions. And I have to be a positive person because I know I'm going to have losses. I mean, that's one thing I know. So I go, okay, but here's the big thing about these losing trades. I love them because that's where I learn.
Learning opportunities. Right?
People, like you just said, I'm losing. What did I do wrong? Oh, my gosh, you know what? My stop, my entry, my position, whatever. There's so much learning from bad experiences. A losing trade's a bad experience. Study it. Look at the things they did wrong in my life outside of the market. Why did I do that? I know what I was doing, but what was I thinking, right? Like, study it. So to me, it's like a great learning experience to study the losing trades, and most people just clam on the computer. They walk away. Not me. That's valuable learning experience. So to me, a losing trade is actually a good learning experience.
Good opportunity to improve. I feel like I've learned more from the downdrafts and the painful periods than the winners.
Oh, you don't learn anything from a winning trade. Well, look how smart I am. I get it. I'm in charge of the world. I'm King Kong. Well, wait a minute. You just got lucky.
What I have to ask about cryptocurrencies, Bitcoin, not. I know, Larry. I might have told you we wouldn't, but I have to know. I mean, right? So when we talk, it's funny. Gold going higher, stocks going higher. Bitcoin overall has done quite well, also. I mean, how do you think about cryptocurrencies? How do you think about Bitcoin in 2024? Is that an area that you are interested in? Yes or no, and why?
It's really hard for an old man to imagine people would buy something that has no value. I can't go into a store and I can't go to Trader Joe's and buy a quart of orange juice with a crypto coin.
Right.
what can I do with these things?
Yeah.
I got, to me, it's like, I don't get this at all. However, as a trader, I realize it's been a great trading vehicle.
Yeah.
But is there any use to this thing? Not that I can see yet. I mean, like, and Trader Joe's couldn't use a crypto coin because it fluctuates too much.
Yeah. Yeah.
And they have to pay a conversion fee, somebody to convert it back into dollars, that they want dollars. Like, well, wait a minute. Guys with cryptocurrencies want to sell me a cryptocurrency so they get my dollars. So I'm like really confused about this. But as a trading vehicle, yeah, it's been a great trading vehicle. So where are we right here, right now? I think it's going to go down.
Yeah.
My cycle projections think we probably have about a 3-month, maybe a 4-month move to the downside.
Yeah.
Coin has been one of the weaker of the Bitcoin stocks. So I'd probably focus on that as a short sale candidate.
We only have about a minute left, Larry, but I'd love to know. I know you have a premium product on StockCharts.com. It's so cool to have you as part of the platform that people can access you and your experience and wealth of investment knowledge. What would people expect with the family gatherings, with the newsletter? What are you trying to accomplish with that product on StockCharts?
Really try to teach people more about the market, show indicators that really work. These are indicators I developed myself that are unique to me, that I've worked and traded with for 50 years now. That give us an insight so we have an advantage in the game. Are they perfect? No. But when they come together, do we have a high odds or high probability of a winning trade? Yeah, we sure do. So it's just better tools for better trades.
Larry, this is awesome to sit down with you. It's such a pleasure. And you made a name for yourself as a successful commodities trader in other markets, but also as an educator. You've inspired me and many, many others. So thanks for continuing to do so.
My pleasure. Thank you very much.
Good to see you, Larry, and thanks for coming by. We'll do it again sometime, all right?
Look forward to it.
Folks, that's it for the Final Bar. A special thank you to the great Larry Williams joining us here in the studio. I hope to do that many times going forward. For StockCharts in Redmond, Washington, I'm Dave Keller. Be well, stay safe, have a good night.